it's hay fever. Starting to feel it, yo. Eyes dropping everywhere, shit like that. Anyway, I'm not gonna come through that energy, bro. How you man doing? Yeah, man's a little bit ill right now. You feel me? Pollen's in the air and that. So, but I hope you guys are doing well. Hope you guys are doing well. Just give me like 3 5 minutes and we just set up everything. You feel me? And then I'll get onto the video. Pop out that. That's cool for now. Mm. Yeah, that's what I was gonna do. I was gonna put some music on, but two beats in the background. You feel me?
Yo, Bash, you been tripping on them hoes.
Yeah, tell me if the music's too loud. Should I turn it down? Should I turn it up? And if the music level is good, then I'll move on with your pre-market analysis. We got like 25 minutes until the open, so I'm gonna give you guys a little bit. I'm gonna show you guys how I do my down top down analysis. You guys will see what I mean by that. A down top down analysis. Like that, put you like that. In fact, I'm gonna do that instead. Oops. Alright, cool, let's get on with it. So, you just open your chart and you see yourself, you know what? Can I erase everything? Nah, I think there must be an option. There has to be an option. Hold on, till I just. There is an option, I know there is. Hide drawings, there we go. Boom. That's on all charts, right? Oh, no, apparently not. Okay, cool, then that serves no purpose, I'll be real. So, what I usually do, the lowest time frame that I will analyze structure on is the 15-second. But that's only when price is in the zone, right? But when price is not in the zone, for example, here right now, I'll just look at the higher time frame narrative on the 1 minute. So how I start is I zoom out. I zoom all the way out and I draw my zones. You know what? Fuck it. Let's start from scratch. I'm gonna delete everything here so you guys know why I even put everything here. I delete everything. Everything. Absolutely everything. And I'm gonna just start from scratch. And if you see in the way I'm erasing these drawings right here, that's a little clue on how I do my down top downs. All right, cool. So we're gonna start the top down, right? So this is how I do it. I like to draw my zones first by looking at the. I look at structure on the lower time frames going up, right? So that's where I start. So this is what the process looks like. We have the S&D responsible right here. These zones are usually gold. We have the origin of the move right here. We have a zone at the top of the range. Now I usually make these purple, these manipulation. We don't trade from these zones here. Another zone at the top of the range, but that's unnecessary. Then I won't count my swings just yet. So then I go into the 1 minute. I zoom all the way out. So I wouldn't be looking at candlestick structure here, trying to figure out, okay, cool. Now I'd zoom out. Oh wait, one thing I forgot to do is, yeah, you also want to make note on your highs and lows, because that's where I'm getting these zones from. Don't need that. Right, make note of them. Just the recent one is good enough. Don't need to be, plotting everything in your chart. So when you zoom out like this and you read structure, boom, 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 boom. So we are within this zone. To the left here, we just took out a high. So, okay. This was the S&D responsible too that we just blick off. So we got that. We have the origin down here. So this is what I'm gonna do. Nah, I'm not gonna choose that. In fact, it's a higher time frame, innit? Alright, cool. This was the protected high. Boom, boom, boom. I'll draw the zone from here. And I'm paying attention to this origin. I'm paying attention to below here. Then I go on the 15-minute, do the same shit, zoom all the way out, see where we are in structure, you feel me? We have another origin of the move down here. In fact, that's also the S&D responsible for the break too. No, I'm gonna just put my levels there. We also have another area, the origin of the higher time frame move, which we've left unmitigated. So I'm paying attention to this area too. Just below it. Now I'm going to 4 hour. Yeah. It's lagging my whole shit. We are within this S&D responsible here. I'll do a little. Yeah. We have that. Okay, cool. Now we see this higher time frame. So don't forget to mark out your protections, right? Where these zones even come out from. You know what? I'll stick with green. So you guys see the S&D responsible for this higher time frame breakout. It's at the top of the range, right? So this is not a zone that we want to be using. So I'm gonna make that purple. But I do see the origin of this move. This is on the higher time frame here. So this is what I'd much rather participate in. Let's make that gold. And I'll apply my levels in here. It doesn't seem like we're gonna be here for some time though, so let's do that. Then I go on a daily, do the same shit, and you're like, oh, okay, nah, that's pretty much it, right? So that is literally the lower time frame structure, right? So you guys know that the first rule is to trail your highs and lows. That's why I start. That's my routine analysis. That's what lower time frame structure looks like. Now I'm going to show you what higher time frame narrative is all about. So this is me going from down to the top analysis. Now I'm going to show you the top down analysis. You feel me? So that's why yeah, it's silly. I call it sounds silly, but down, top, down analysis. So higher time frame narrative now is you reading candlestick structure, which once you've done all your analysis, the lower time frame structure, it's way easier to read now, because now you're just reading candlesticks and you're reading. Anyway, look, check it. This is the S&D responsible. We tap into the 30 of it, see a bounce up. We closed above the previous candle's high. We're in a bullish uptrend, right? Now, create this low. We're failing to close below this low here. That's nuts, isn't it? Now, though I say that, we had a closure above that high there, meaning the low that we're paying attention to is this one here. So that's on the daily. From the daily perspective, you can see that the 50% just got tapped and you see a rejection away, nearly a 1-to-1, right? So that is the wick on what? The 25th of April, yeah? Let's step down to the 4-hour now. And let's read the narrative in the 4-hour on candlestick structure, right? So you have an origin on top here, another origin down here. We tap into the 50. We're in the 50% right now, so yeah, target is the 1-to-1, right? So we could at least see price. So this high could be a target here. Let's go on a 4-hour. I mean, the 50-minute and just read the narrative. You zoom into candlestick structure. We tap the 30 and leave. They would come back to the 50 and leave again. We're at the top of this range right here. So we're currently downtrending right here. And that right here, while marked down the high time frame, is the protected high. Taking out this protected high is pretty much completing this 1-to-1 of this zone down here, the origin of the move. Pardon me. Alright, let's go on a 1 minute now. Let's see what price is doing on the 1 minute. So we just go down to candlestick structure. And you'll just see price is just steadily rising. You see a closure above this high. I'm gonna have to step to the 15 and just see what I go on. These lows are targets. Not only that, we have 1, 2, 3. We have 3 swings. We have 3 swings. When getting to the creation of our 4th swing, we're getting there. We can't say that it has yet because we see no closure above. We're getting there. So what does this look like to you? You're starting to see price make larger swings compared to this push up. So we're approaching our 4th swing, plus we're approaching a higher time frame high up here, the protected high. So this is not an environment in which you want to be buying. Where I'm choosing to buy is at the bottom of the range. Bottom of the range. Right now we're at the top. In fact, we're above. What's this yellow line here? Yeah, this is a higher time frame high. We're currently above. So yeah, you don't want to. Now I'm looking for longs. So in this environment, the only longs that I'm gonna participate in is gonna come from what, 17,460 to like 440. 460, 440 in these areas down here. Now, if you were looking to short, we'd wait for the body closure above this high here, and understanding too that that first break can be fake. So you also want to wait for that second confirmation. That first break just tells you, okay, cool, we've now entered into a range environment, but that range environment can easily turn into a continuation up. Like this. Let's say we do get that break and we come back down and take out this low, right? We create our bearish swing. That could literally just be a reason to, you know, a liquidity grab to go higher, take out this high, boom, take out the S&D responsible for whatever broke it here, tap back into a zone, and then lead back, you know, into levels like that. So if you were short, you would be wary of that. How much bearing does this high time frame analysis have on our sub 1 minute entries? I seem to get carried away and force trades based on higher time frame. So now I don't do that no more. I recommend that you do a top down. I do believe the higher time frame and that higher time frame is where your decision should be based from. Most definitely. You want to follow higher time frame structure. That's the whole reason why in the beginning of the stream, I was showing you how I analyze high time frame structure from the bottom to the top, and how I use candlestick structure to read the narrative, right? So that's the higher time frame. To now show you, okay, cool, where are the best areas? Plus that's like a double check as well, by the way. When you trade, when you analyze structure from the bottom to the top, that's just you, okay, cool, here's your structure, right? But then the higher time frame narrative will show you if those zones are good enough to be used. It will show you equal highs, equal lows, weak highs, weak lows. It will show you whether or not we're on 4 to 6 swings or not. So I believe having a higher time frame is very important, and you should implement that in your plan. Forget the plan. Don't even your routine. Implement that in your routine. What routine? I'm not talking about your daily routine. I'm talking about your trading routine. Your preparation to take the next trade. I always say to myself, I was even way back, I think like a month ago, when my group was free, I told one of the guys in there that every time you win, you want to zoom out. Zoom out. That's the first thing you do. Why? Because when you zoom out, you're analyzing lower time frame structure, right? Zoom out, know where you are, then step up to the 1 minute, then zoom out, know where you are, step up to the 15, zoom out, know where you are. 4 hours, zoom out, know where you are. Daily, zoom out, know where you are. Alright, cool. You mapped out your structure, you mapped out your zones, now you zoom into candlestick structure. And then you read the higher time frame narrative on the daily, on the 4 hour candlestick structure, you read the narrative on the 15 minute, on the 1 minute, and do those zones that you draw, are they in optimal areas? So yeah, I recommend that. If I'm trading at 1 minute time frame, is it necessary to start high time frame analysis from weekly or daily? Please clarify. So again, I literally just went through the whole process with you on how I do my top down. Now it's really from lower time frame structure to higher time frame narrative. Going from your lowest time frame that you analyze from, so you said the 1 minute, you would go from the 1 minute, you would zoom all the way out, map out your structure. 50 minute, zoom all the way out, map out your structure. 4 hours, zoom all the way out, map out your structure. Daily, zoom all the way out and map out your structure. Once you've done that, then you want to zoom into candlestick structure and read the narrative. Which fib levels you are using here? 30, 50, and 70. Yes, yeah. Got 5 minutes until New York open. Now, usually, when I finish reading the narrative, I'm on the 1 minute. This is how I prefer to just to keep track of what's going on. Yeah, I like this view much better. So this is what I'm waiting on, really. If you guys have any more questions on that, that's why I really came on the stream, to show you my whole routine. Just trailing highs and lows. That's my routine. I just showed you guys my routine, trailing highs and lows. That's what it looks like. And then what's after trailing highs and lows for me? It's bottom of the range. So I told you guys that I'm only willing to enter a long from these areas here. What, 460? Yeah, 460 and 440. That's the bottom of the range. Of what? Of this right here. This is the previous range right here. And that's 50% of the previous range. Right now we're at the top, and I don't mind yeah, we can just chill for a bit. Hey Rami, I appreciate that, you know. I hope you're understanding it now. Yeah. Implementing it, applying it. What does that zone look like? Okay, cool. Yeah, I'm just over analyzing. Never mind it. You guys need to learn how to read the narrative correctly. And that first starts with understanding structure. Trailing your highs and lows is structure. And only from structure do you get your zones. But your zones have it has least priority because narrative comes before your zones. So when I go on a 15-minute, and read candlestick structure, what am I seeing? I see that this is the current protected low, this candle there. And if one of my confirmations is to sweep something, and that's what I'm gonna do. I'm gonna wait for that. Looks like we're failing, and we're going up top. You know what? Towards this high up here. Oh, is this market open? Yeah, it's market open. Let's see what's going on. So, oh Lord. Let's watch this real quick. So even this zone that we see that's being mitigated multiple times. 1, 2, 3, 4. Let me highlight it for you so you guys can see clearly. I'm reading candlestick structure right now. So not only are we at the top of the range, but we're trading from a zone that's been mitigated multiple times. You want to wait for a sweep of the zone that's been mitigated multiple times below it. Now, we just had a body closure below here. And I told you guys that, okay, cool, be careful. That's 4 swings and we reverse, right? You see these green arrows here? You see that? We got a failure to close below the zone here. Well, we've got 30 seconds left on the candle. Let's see what I'm going. I think we already. So once we take that area we've been mitigating multiple times, right? What do we move back into? The previous range that broke structure. We tap the 30% of it. Right there. And we leave. Now what I'm waiting for is, you know, this low to be taken down here. We can forget this now. Now you want to be counting your swings. You want to start counting your swings here. Okay, cool. The 1 minute don't show it well, so see this little breakout. See who won. Let me start. And this is how you time your entries. Just count 4 pullbacks. That's all you have to do. Let me get rid of this because I'm not even going to be showing from the areas there. Okay, that's the initial break. I don't count that. But yeah, that's a swing there. So we got 1, 2, 3. We did not create the 4th. So this is not your move. Plus we were still inside this zone at the top of the range. I'm waiting for this low to be swept. We end up moving back inside the previous range here. The fib that I just deleted right there. But this is the higher time frame zone. I'm gonna step to the 1 minute real quick. I'm gonna organize, a few information. Let's do this. Yeah, let's stick to that. Yeah, that's a bit too zoomed in, I can't lie. I need to see the bigger picture. Yeah, that's better. I like to view my charts like this. Really, the information that you need to use, it's 1 minute candlestick structure, but the actual bigger picture includes where price came from, aka the origin of the move, the higher low that got broken. So the previous range, right? You need to be able to see where price came from, the previous high, the origin of the move, and the current trend. Those are 3 pieces of information that you need: the previous higher low, the origin of the move, and the current trend. You need to be able to see all of that. You don't need to be anything past, like, you know, the structural high that got taken out, you know, that made the previous range. Anything before that, you know, it's just meh. Right? You've already done your top-down analysis, right? So that information there is, you know, it's a long way away. But if we're talking the information that will help you now, to make a decision, then all you need is just that previous range, the origin of the move, and the current trend. You need to be able to see all those things, and I recommend that you do that from the 1 minute. But yeah, guys, this was just a pre-market. I hope you guys enjoyed this. Uh, if you value the information, you don't have to agree with everything that I say. But if there's something that you resonate with and that you believe that your trading will go to the next level with, which is basically everything that I just said, that trust me, everything that I'm saying. I'm not, what, you think I'm just chatting shit when I'm coming online to spend my energy with you guys? No. Take everything I say as a fucking law. I ain't here just wasting my breath. Backtest it, it's there. You're seeing it on my screen, it's on your screen too, it's on your chart too. I'm not just here chatting shit. I'm giving you guys the vision, G. I'm giving you guys I'm showing you guys what I see and how you can see it too. Now, if you're still struggling with structure, then I recommend that you watch video 3 of the playlist. It's the second video in the description. Second video? No, that's the only video link in the description from the original masterclass, yeah? Now, if you've mastered structure, I want to learn how narrative and order flow now incorporates into the market, then, you know, step into my group, Masters of Price. That's where I teach narrative and order flow. That's what we're all about. An advanced application of the understanding of how price moves. Link is in the description, you feel me? But don't rush though, because if you don't know structure, you will fumble narrative and order flow. So best believe, if you join the group and you don't know structure, you're doing yourself a disservice. So I don't recommend that you join the group if you don't know structure. You want to know structure? Okay, cool. Video 3 of the original video 3 of the original masterclass. Study that. Get that down. Get that down. Master that first. Master structure first. The information is there. Read. So I'm out.